Occidental's surprise $76 per share bid is valued at $57 billion, including debt. That is well above Chevron's $65 per share offer, worth $50 billion including debt, and would make an Occidental-Anadarko deal the fourth largest in oil production. Anadarko said it had received the bid but had not yet determined whether it was a superior proposal, and for now reaffirmed its recommendation of a sale to Chevron. Occidental said it boosted the cash portion of its offer to 50%. Chevron offered 25% cash and 75% stock. Anadarko shares jumped 11.6% to $1, well above the $65 per share offered by Chevron. Occidental shares fell less than 1% to $62 and Chevron's were 3% lower at $1 on the day. A deal would add nearly 250,000 acres to Occidental's holdings in the lucrative Permian Shale Basin, and double its global production to 1.4 million barrels of oil and gas per day. We are very confident. Our proposal is so strong, it's definitely superior, and we now know the value which we can communicate to shareholders, Vicki Hollub, Occidental's chief executive officer, said in an interview. She said the deal would boost cash flow and allow Occidental to raise its dividend over time. Still, Occidental has lost more than 7% of its value since it disclosed its interest in Anadarko. It faces hurdles to sell its own shareholders on the deal. Occidental is going head-to-head against a supermajor 4 times its size and Chevron is likely to win, said Pavel Malkhanov of Raymond James, adding, "This is an extremely fluid situation. The value of this is in the shale," said Hollub, who ran Occidental's Permian Basin operations before becoming CEO in 2016. Occidental's latest offer could pressure Chevron to revise its bid, although Chevrons said Chevron has no incentive to do so unless the Anadarko board accepts Occidental. Chevron did not respond to requests for comment. "Something tells me this isn't going to be the last foray between these companies," Chevrons said. "Occidental must deliver strong growth or it could itself become a takeover target," said a person familiar with merger and acquisition discussions. Currently, there are about $40 billion of onshore oil assets up for sale in the United States. Occidental's offer would require shareholder votes at both companies. Anadarko would have to pay Chevron a $1 billion breakup fee if its board chooses Occidental's offer. Analysts have said they expect further industry consolidation. Small oil producers revolutionized the sector through advances in horizontal drilling and fracking, but their stock prices have languished with investors pressing for higher returns. The Permian produces about 4 million barrels per day, and is expected to hit 5.4 million BPD by 2023, according to consultancy IHS Markit, more than the total production of any OPEC country other than Saudi Arabia. Under Chevron's bid, Anadarko shareholders would receive shares of Chevron and $1 in cash for each Anadarko share.